So we have done analysis on some pairs. So, but we want to look at, this is the last session. I want to look at um, NZD USD and AUD USD. So this is a potential setup on NZD USD, and this potential setup is a continuation setup. This is a scenario 2 setup. Though I was expecting the market to come here last week, but this guy range, should I call it range? Yeah, the market could not be able to get here. So this week, definitely at this point here, I don't see any reason why I should be selling or I should be buying because there is nothing to do here, right? So based on the way I trade, so if the market is coming here and give me reasons, provide a clean setup for the counter trend, then it's going to be good enough to counter trend. But I want to counter trend when the market is coming from the higher time frame because the higher time frame retracement is a huge trend on H4, H1 time frame. But the only way I want to engage with NZD USD is when market got here. This is SNRC2 setup. So why am I going to sell at that point? Comes with um, top-down analysis. So I don't just come to the chart and So I don't just come to the chart and start looking for fantastic five randomly. If you look for fantastic five randomly, to be honest, you are going to be seeing setup every 1 hour because fantastic five happens whenever whichever direction the market is moving, even in 1 hour trend, 30 minutes trend, 15 minutes trend, market is always providing fantastic five. So if you look for them randomly, you will see them everywhere. But my system is, I'm not interested to take every fantastic five I see on the chart because it's not every fantastic five you see that will pay you money. So each time I want to trade a particular setup, there are reasons behind why I want to take that setup. So that is why I don't take more setup in a week. And that is why, since I'm not taking more setup in a week, I'm winning more of my setup anyway. So if we go to the top down analysis, even starting from the weekly time frame. So on the weekly time frame, or let even start from the monthly, which is the normal thing to do. You see from the monthly time frame, obviously we are in a downtrend, right? So since for the past 4 months, this is 1, 2, 3. Okay, we are currently 4 months. The market has been going and selling to the downside, right? So, but here on the monthly time frame, we know that the market is pushing based on candlestick. But when we go to the weekly time frame, we'll now want to see which characteristics of other uptrend, downtrend, which characteristic can we find on the weekly time frame? Because this movement here on the monthly is just monthly candle. So I want to see how the momentum from the higher time frame. If I see okay, the market is pushing to the direction, I am interested in the trend direction. The only direction I use in my strategy is the trend direction, no any other direction I use. Because any other or every other direction is not important. The trend direction is so important that when you can predict the direction of the trend at the particular moment, then you wait for only fantastic five that happens in the direction of that trend on the lower time frame, 1 hour, 30 minute H4, they works magic. But if you trade them randomly because it is fantastic five, you believe they don't work. In fact, they will know it's not fantastic five is not working for some people. So when we go to weekly time frame, you realize that from the weekly time frame, market structure wise, this guy has been, from here, it was creating this characteristic of an uptrend. The moment the market gets so close to this potential uh, as a potential Quasimodo, from here it started rejecting. Since then, it started giving us these characteristics: impulse, correction, impulse, correction, impulse, correction, impulse, right? So because of that, we are on a downtrend, and then the market is still going to sell. So if we're already in a downtrend and you go to the lower time frame and you are seeing a continuation setup, what does that mean? Psychologically, that continuation setup is telling you that this trend that we are in is likely to continue going down in that specific direction. That is what continuation setup means. So from the weekly, we are in a downtrend. So if we also go to the daily time frame, also the daily time frame is also singing the same song, right? Was it last week? Yeah, it should be last week. Last week was the reason why this guy was sold. I think we sold NZDUSD. So here is like impulse, correction, impulse. What are we doing? We are expecting another correction to that setup on the H4 time frame. So when this happened, then we sell. But because the market is not is kind of choppy, right? There are times that if the markets want to come here, it may definitely provide a setup for you to counter trend. You can counter trend to this point. But when you see the market is choppy, it's consolidating, it's not a good idea for a counter trend. So what you have to do is to wait patiently for the market to come to your zone, because the only thing you do once you analyze your market, the only thing you do is you wait. What we are doing right now is we wait 80% of the time. So, but when the time is right, market get into your zone, you get in. So right now, this is not a better place to trade, right? We want to see the market comes here to this zone. If market comes here to this zone, if market gets here to this zone, if market get to this zone, I repeat, if market get here to this zone, do not hesitate to sell. Do not hesitate to sell. Do not be afraid to sell. So most time when you wait, you can wait so patient for market to get here. And then the market get into this zone. The next thing your mind started telling you start hearing some questions within your mind. Are you sure it's going to sell? Are you sure it's going to buy? The thing is, no matter how you are good technically, no matter how I come to chart, I spend my time and analyze, I will still take a loss. So you have to make peace with that in your Forex, whatever strategy your Forex joining, like people are still, I've seen people who have been in the Forex space for 2 years, but they are still being paid when they hit a stop loss. So when are you going to get rid of that? 2 years and you are still paying when your stop loss is hit. A stop loss that is the only friend you have. A stop loss means you stop a trade. So you are still paying for hitting a stop loss. It means that when are you going to stop getting the pain? When are you going to stop doubting your setup that even if my strategy is 100% win rate, as long as it is the hands of human being, it can never be 100% because humans are meant to make errors. There are times I come on the chart, I take some decision as if I'm stupid. It happens. So because of that stupid decision, you take a loss. It happens from time to time. No matter how you are good technically, you must stop a loss from time to time, which is why I said a stop loss is not a loss trade, but a stop trade means that you were able to stop a loss. If not for that stop loss, you would have blown your entire account. So the stop loss is the best thing that happens to traders. The only friend you have is a stop loss. So when market comes here, stop thinking too much. You have to get in here, put your stop loss a little bit above here, and then you can hold. You can say, okay, from your risk to reward, I'm going to target 3%, I'm going to target 2%. When it comes to risk appetite, you're supposed to define your risk. For me, I'm going for 4%. right? The 4% is my fixed risk to reward. So if you come here, you hit, you enter here, you should be able to measure your risk to reward. If you want to hold, because top-down analysis said we should continue to look for sell. And based on our top-down analysis, we have a beautiful potential. It's still potential. Potential means it may happen, it may not, right? Market may come here, market may not. There are several times where we have a beautiful setup and market will not even come. It will keep going. So that is why the market is not meant to please you all the time. Each time the market comes to your zone, you sell. Each time the market fail to come to your zone, then you wait for the next opportunity. So this is my potential this is my projection on NZD/USD for the week. Hopefully, if the market comes here, I hope it comes here. If it comes here, I will be so confident to take that 4%. So the same, almost the same analysis quickly before the zoom in. Let's go to this one. NZD/USD. NZD/USD also, I was looking at how I can counter trend NZD/USD last week, but it did not work. And the market has been in consolidation like that. It's consolidating. The same thing happening to NZD/USD. So is this CPI news on NZD? So I was thinking there's going to be enough volatility in the market to push this guy to the upside. But let's see top-down analysis wise. If he asks me, I'm not interested to look for any fantastic 5-8, either to sell, that to buy. I am not interested because top-down analysis, like I said, is the Google map. It gives me an idea where the area I should be expecting fantastic 5. So if I'm not expecting fantastic 5 here, no matter how beautiful, except the market from the retracement, the market should be able to give me fantastic 5 that shows that this market is coming here. Then I can counter trend. But for now, I have so many pairs on my list, so I cannot force myself to look at AUD/USD. So let's look at top-down analysis wise as well. If we start our analysis from the monthly time frame, you see that this guy from the monthly, we have been, if you look at the monthly, we are in a downtrend based on market structure because this is the lower low. But don't forget, this was a very strong danger zone or the buying neighborhood that causes the huge push to the upside. But right now, the market is retracing back, right? So if you go to the weekly time frame, you will see reason why this market is sinking down. So if you go to the weekly, we have this potential market rejecting from this. This one is tricky, but if you look at it very well, like I said, if you watch my video last year, how I talk about the Quasimodo mastery, right? So sometimes when you have something like this, impulse correction, excuse me, guys, you have something like this. What am I doing? Yes, so you have something like this. So what that means is if the market break this level, so the latest shoulder, I'm talking about Quasimodo mastery. The latest shoulder is this one. But what if the market went further to break this one? The latest shoulder becomes this one. So that is why when Quasimodo happened, and you don't know about QM mastery, I mean, the way Quasimodo happened in the real life chart experience is what I'm trying to show you. So you'll be waiting here, and market will come here and sell. So this is what is going on right here. The latest shoulder is, if you want to check the current level that the market break, is this one, right? So if we want to say this one becomes our high, the whole of this is a lower low. And here, this is the latest shoulder because it is this shoulder that has this high. So not this one. When the market break this shoulder, this is where we were expecting the market to retrace here, but the market did not come. It went further to break this one, So that is why the market is rejecting here from the latest shoulder right here. So here becomes our high, here becomes the higher high. And that is where the market is rejecting from. So in that sense, we are also, when you look at market structure wise, when the market was pushing to this potential is now a Quasimodo because market has already selling from that point. Before the market get to this Quasimodo, market structure wise, we're pushing impulse, correction, impulse, correction. This is the last official lower high before the market gets here. But if we zoom it, let's zoom to that point. So the market structure is so important to do your, so when you do your top-down analysis tells you where the market is going. That is when you now start applying your Fantastic Five. Only when you know the trend direction, you now start at, okay, because this is where the market is going. Then if you see Fantastic Five showing up, any of the sectors showing up in that direction, is a bonus. If you keep doing that, if you do that 10 times, you will win 7 times. Yes. So if you look at it now, if you go to line chart for clarity's sake, you see that, let's go to line chart. You see that this guy has almost been disrespected, but it's going to be obvious on the daily time frame. Almost is disrespected. Let me say almost. Let's go back to line chart. And also look at the momentum to the downside that you respect. You know that the sellers are coming into the market. So like I said, each time the market break a particular level, it takes a lot of energy, so it gets exhausted. So they have to be a pullback or exhaustion phase before the market can continue pulling down. But the purpose of this top-down analysis is to tell you that this NZD, is it AUDUSD, is going to be sinking down to the downside, right? Based on our top-down analysis. So now let's go to the daily time frame. So if you go to the daily time frame, you also see from the daily time frame, characteristics wise, since the market started rejecting from if the market started rejecting from that potential from that Quasimodo on weekly time frame, what happened? You see that push to the downside, correction, another impulse. So that impulsive move also, market structure on the daily time frame, impulse, correction, then impulse to the weekly Quasimodo, and then the market drop, failed to break this level, created a push, a correction, finally break. So the Dow theory has been breached, right? That tells you that, according to Mr. Dow, he stated that price will continue to move in this specific direction until the proceeding structure breaks. Now that the proceeding structure breaks, we can say the breach of the Dow theory. But however, in Basra concept, we define Quasimodo. If you look at the Bastra PDFs, so many Bastra PDFs, we say Quasimodo can be defined, or Quasimodo is characterized as when the series of lower highs and lower low, or when the series of higher highs and higher low is being interrupted or breached. That is when a QMRO is created. So it's not just you studying Fantastic Five. You cannot study Fantastic Five without understanding market structure. You need to sink yourself with understanding of market structure and market structure synchronization, because when Fantastic Five and market structure is just one, right? So when we say a QM is when the series of higher highs and higher low, we are telling you market structure. So when this thing happen and you see a QM, you have the market structure knowledge, you know the reason why this QM is happening here. There is no way anytime a setup happen, in the market, fantasy fire happen in the market, there's a reason for that. So if a setup happen in the market and has no reason, what that means is that that setup is not worth taking. So market structure helps you to understand which setup that is worth taking and which setup that is not, because your maturity in your trading, not just our own strategy, maturity in your trading is when a trader knows a setup to take and a setup to avoid, because there are some setup that will use to trap you in the market, right? So, which means that based on the breach of the Dow theory here, a QM is created. Here is the low. It's sometimes we have set up on 4 hours, 1 hour, 30 minutes, but sometimes we have them on the daily. So here, like this one, it happens on the daily, which is the low. Here becomes the high, and here becomes the higher high, and here becomes the lower low. So what are we expecting? The market has been ranging here. We want something to push back to this level, and then we sink to the downside. It's going to sink from there. So when this guy comes here, do not hesitate. Do not listen to your mind. Enter the trade. So this is where if the market comes here, we are selling. And sometimes here, there is nothing to kill yourself. Market is consolidating. For now, go and be concentrating on other pairs, right? There is opportunities everywhere. But if this guy comes here, there is nothing to stop us from not entering this trade. So this is the potential setup from here. But then don't forget, any setup that has no, according to criteria, when a setup has no confirmation, it becomes a high risk. So for me too, when a setup has no confirmation, I am not bothering, no matter how beautiful it is. So this setup happened on the daily time frame. What that means is if a setup happen on 30 minutes, you go to the 2 time frame higher to look for your confirmation. So if it happens on 30 minutes, your confirmation comes from what? 1 hour H4. It means if you search on 1 hour, you did not see, then you go to 4 hours. If a setup happen on 4 hours time frame, daily and weekly becomes your higher time frame to search for confirmation. So this one happen on daily. It means that weekly and monthly becomes our time frame to go look for confirmation. The confirmation give us more confidence. Now I'm going to break the confirmation reasons for you. So if you come to the weekly time frame, you see this bearish engulf. Obviously, you see that it completely engulf means swallow. So it completely swallowed this opposing candle. Look at it, make it look so small. So this is a confirmation that when price made mistake, except this price want to continue. If it made mistake, and however, if the price decided to continue coming down, it's still going to provide setup for us. What would this for the market to drop to this point is a long-term perspective. So what we want to do at the moment within the week is what I'm explaining to you. So this is a bearish engulf as a confirmation. Bearish engulf, what does bearish engulf mean psychologically? Bearish engulf also most traders use as a reversal. Bearish engulf is telling you that buyers are coming into the market. Bearish engulf is a reversal pattern. It shows the point at which sellers are coming. If it is, yes, it's bearish engulf, sellers are coming into the market, right? If it is a bullish engulf, it shows a point. So when you come to the higher time frame and see this huge bullish bearish engulf to the downside, psychologically, it's telling us the strength of buyers. Look at when the market was pushing to the upside. When this guy was pushing to the upside, there is no opposing candle that is big at this one. All of a sudden, we started seeing this huge red candle completely engulf the green candle. Tells us that sellers are now coming into the market. So you come to the weekly, you see bearish engulf. Psychologically, sellers are coming. Then you come to the daily time frame, you see Quasimodo. Quasimodo is showing you a point at which this thing is changing from an uptrend to a downtrend. And also Quasimodo means reversal. So you see the confluence. That is why we use confirmation. So this is a huge reason why if this guy comes here, there is nothing to stop you except your mindset is not strong enough, right? There's nothing to stop you to take a trade. If this thing, NZD USD comes, definitely, if you risk to a 4% risk to reward trader, definitely you are going to eat all of them. 8% is assured. So here is the potential setup for the week. I'm not going to say we want to counter trend when price is coming, because price currently is consolidating. So all you have to do is concentrate. If you check my watch list, I have more than 10 pairs. Some of them are correlated though, but I use them for my analysis. So I will go to the pairs that is ready to give me a setup today, tomorrow, and trade and wait for this one. When market make mistakes and come here, it's going to drop. So this is my potential setup or potential top-down analysis on AUD USD and NZD USD. So we wait for things to happen. If the market comes back to the zone, and then we will have reasons to enter the trade. So if you can ask me question, I used to do free top-down analysis every week. Last year, almost every week, right? Then this year, I try as much as possible to do once in a week. But the more I'm getting better every day. I'm better than last year. I'm better than last month, right? I'm getting better, also getting engaged. And then I'm becoming more responsible, not just in my trade, but responsible with my life. So sometimes I'm busy. I'm not having that time to do this kind of free top-down analysis, because my free top-down analysis, if you want to trade Bastra with peace, there's nothing you want to tell me in Bastra concepts. There's nothing. There's no method of Bastra. I have not soaked myself. So I soak in and I come out with my own unique approach. Why? Because I know the weakness and the strength of the Bastra strategy. So sometimes too, even if you write a book in 2016, if you are serious, if you are serious with that knowledge, that book should have volume 3. It means a strategy needs to be updated too, right? So if you want to trade Bastra with peace, learn top-down analysis, number one. So if you want to be good in top-down analysis, then you need to be good in reading market structure. Top-down analysis, the Google map. I don't care, even if you are using indicator or whatever, if you can marry your trading life with top-down analysis, people don't emphasize so much on this top-down analysis. It gives you peace of mind. It gives you direction. It is this direction from the top-down analysis that you will use to trade in the smaller time frame. Even if we have this idea where they say, as a scalper, you use 1 hour time, 1 hour time, it doesn't stop. Even if you trade from 1 minute time frame as a scalper, it doesn't stop you from understanding the overall direction of the market. It makes you to trade with confidence. It makes you to trade with peace. So, and this does not just come by joining there are people that they started following me from 2023. I'm not popular on social media. I come here and I do my stuff. But I'm 100% dedicated on the chart, because I believe that without devotion, there will be no transformation. Even prayer cannot help you. If you pray without devotion, nothing can help you. So me, I spend my time on the chart, and I'm not going to be listening to anybody. I observe the chart to some extent, that I look at the chart until the chart began to speak with me. So this is the same method you have to do. You spend time on the chart and then ask question, how is this market, how is this pair moving? I wasn't good like this when it comes to me taking a setup. Sometimes I will win. I will be big for. It has never happened before. That is because the more you spend time on the chart, the more you become better, right? So you must understand top-down analysis, and also you must understand, if I'm taking a setup, this is the direction from the market. I'm not using DMD1, DMD2, right? Just ordinary top-down analysis should be your direction. So when you know this, when you know the trend, wait for fantastic 1 hour time frame, 30 minutes time frame, 4 hours time frame. When it happens in that direction, you always, if you try that 10 times, you are coming out victoriously 7 times or 8 times. Some, if there are months that will be too good, you might come out with you may be nine times correct. But that being 9 times correct, you don't need to be 9 times correct with your setup. You don't need to be 8 times. 6 times of being correct with a good risk to reward ratio, you will be a profitable trader. You don't need to be, even 5 times, let's say you take 10 trade. Yes, I want to be correct 5 times. I want to lose 5 times. Because I'm correct 5 times with a ratio 1:4. If I'm wrong 5 times, that is 5% loss. If I'm wrong 1 time, that is a 4% gain. Then 4 times 5. You see that you don't even need to be right. So this mentality of I want to hit TP all the time, I don't want to see stop loss, it means you are not ready. You need to make peace with the fact that no matter how you are good, from time to time, you are going to stop a loss. So when you know this, what matters is the number of wins with a good risk reward ratio always outweighs your number of losses. Then in the entire week or the entire month, you'll be able to see the percentage you have gained for yourself. So I'm stopping now for this analysis. Somebody said I should analyze gold, and the Zoom session is only 3 minutes. Why I don't join gold when I'm analyzing currency pairs is that the approach I'm using on gold is completely different from currency pairs. That is because if you go to the higher time frame, gold does not move like other currency pairs. There is no justification. If I'm using the same system I use on currency pair and I approach gold, I'm finding it difficult. It doesn't work. So I have a different approach on gold. So it becomes like a unique strategy that I'm not sharing to people, because when you come, I'm teaching you the general, my strategy, currency pairs. So some people use it to apply on gold, but the way gold move on higher time frame is not giving you the opportunity to apply the same system there. So the system there is different. So if I'm doing top-down analysis there, I use different techniques. So I don't want to come here and teach you currency pair and the way I analyze now, I'm going to gold. I'm teaching you differently. You will say, maybe I don't know what I'm doing. I just want you to know. So if you want me to teach to analyze gold, I am using my gold approach, and only gold alone, I have a different approach. US 30, NAS 100, oil, whatever pair, but cryptocurrency, normal currency pair is strictly on this method I use on currency pairs. So maybe I'm going to come back again for the last session to analyze gold. But for this session, I think we are done for NZD/USD and AUDUSD. So we have to wait for things to happen according to plan. If things do not happen according to plan, then price is going to give us another data to use to know the next move. So, yeah.